What a beautiful square.
Hold on, I wanted to think. I wanted to do the example on the money in the bank when burning it, setting it on fire.
You're not setting my euro on fire.
No, not setting it on fire.
What's up, everyone? This is Vanessa, back with another episode on my Financial Fluency YouTube channel. So today I have a very special guest with me. I have my friend Martina. Martina, who are you, where are you from, and what do you do?
Hi, my name is Martina. I am working as a financial advisor at Expats, living in Germany, and out of that I became a financial advisor.
She is probably my number one go-to person when it comes to financial wellness and planning, because she's such a personable human being. Like, it feels more like I'm with my best girlfriend than my financial advisor. And a lot of the questions that I have for Martina are about the German system specifically. And my German is not like financial literacy good, so you make it really easy for me to understand everything, and that's why you're here to teach us today. You mentioned that you're a financial advisor. For those of us at home, definitely not me, what is a financial advisor?
That is the most common question that I get. So basically what I like to use as a description is a financial advisor is someone who can take you from A to B in the most efficient way. So our job is to be problem solvers. Our job is really to look into a person's financial and personal situation, personal goals, and analyze different scenarios, outcomes, and needs for flexibility in many different areas, and then find out what is the best tailored solution that we can offer. So my job is really to provide qualified advice that is going to be following the goals of people to lead them to where they want to be.
Exactly, and I think you nailed it when it came to getting you from A to B. It's not going to be a future teller that can look into a crystal ball and tell you that you're going to get that amount of money from whatever fund you choose or insurance. The idea is you want to progressively age into a position of comfort. So how do we get you there? Whether that is through stocks, insurance, concrete gold, I believe is what Germans call housing, right? And not every solution is right for you. So that's why I give Martina my money and support, so we can figure out what's right for me, my family, and my current life situation, right?
Absolutely. Different life stages, different needs. Financial planning is incredibly individual. So there is no kind of playbook that we have to follow every single time. There's just strategies and principles, and how do we apply them for your personal needs.
So when we're thinking about a financial advisor, what are some of the things that you help your clients with?
So many. Basically, I can tell you two things we do not do.
Ooh, that'll be helpful, yes.
So it's sometimes easier to define something by the things we're not. So we are not tax advisors. We don't file people's taxes.
Nope.
We do help you optimize your expenses for your investments. We also do not trade for you proactively. We're not wealth managers in that sense, in the traditional sense of a financial advisor. What we do is help you find the right puzzle of choices for your life. So that could look like insurances, that could look like healthcare, that could look like investments, private equity, solutions for your company, solutions for your employers, solutions for yourself as a freelancer or as a family, child savings, wealth building, pension planning, housing, rental properties. It is as colorful and as varied and exciting as it gets.
And the first place that Martina and most wealth managers should start with is, of course, understanding your current circumstances. So what was the first thing that you did with me and my husband when we first met?
An analysis.
Yes, exactly. So what is going on with your finances right now? And we're actually going to talk about how you at home can figure this out with a demonstration here in real time. Today's example, we're going to be using case studies from like our friendship circles. So we're specifically going to be addressing certain life stages specifically for women, and how we can really understand what our money is doing and where it's coming in and out. Okay, so the first element of financial planning is, of course, understanding the cash flow in and out of your accounts so we can really decide where you have extra cash to spend on equity, on housing, whatever it is that you think is necessary. So in real time, we're gonna build a cash flow graph, and I would recommend you take the next 5 seconds to grab a pen and a paper so you can do this at home. So Martina, where do we start?
Yes, the first thing that we should start with is for you to know that this is gonna be fun.
Yes, I love money.
And the second thing is that we're gonna be deepening these concepts through our series of videos. So we're just gonna go over them on a structural point of view. So this is for you to understand the concepts of how we do financial planning from an insider side. So I'm gonna walk you through, I'm gonna draw it with you, the cash flow structure and the cash flow diagram we work with at our company as financial analysts and financial advisors to analyze, structure, and optimize a client situation.
I also think we should use a case study so we can put some fictional numbers around it.
Sure.
So let's say I have my best friend Sarah, who is also an American in Germany. Mm-hmm. She's making about 60,000 euros a year, and we can use that in the different buckets.
60 gross or 60 net?
60 gross, because net is after tax, right?
Yes.
Exactly, gross and net, don't forget.
Any additional source of income?
Ooh, no, unfortunately, or not unfortunately, Sarah's just a normal girl with a normal job that likes to spend her time doing yoga. So anything that's passive and less high touch would also be for her.
Okay, perfect. Then I'm gonna walk you through the steps of financial planning. The first one is goal setting.
Great.
This is 100% of Sarah's responsibility in this case, understanding where does she want to go. This is going to define the structure of the cash flow in completely different directions. The second plan is liquidity management.
Okay.
Then we're gonna go to risk, and then we can start thinking about wealth management and how to balance it all out.
Great. I think this is gonna be a really relatable experience and example.
Confused about what to do with your money abroad? Well, I can help with that. My financial fluency course will give you the perfect overview of how taxes work, budgeting methods, investing options, and so much more. Check the description for details.
So this is the basic structure of a cash flow, and I just drew it myself so that you can see a little bit of where this is going so that we can interact with it. So there are a bunch of boxes here, and I'm gonna start allocating different resources in different parts of the situation. So the first step of the cash flow is that we're gonna define these two boxes here are going to be related to income.
Okay, income, top two.
So the 60K that Sarah has in this case, so around 5 per month that she has, in this case, they go here into the gross income.
Gotcha. So this is before tax. Sarah has 60,000 a year, 5K a month.
Can you guess what these two would be?
Are those taxes?
One part of it is taxes.
One part is taxes. I got one thing. Okay.
What else?
Are these expenses?
Yes. What do you pay with your salary normally?
Healthcare?
Yes. One more?
Unemployment insurance?
As well. Yes.
Oh, I'm so good at this. Thank you.
And
actually,
pension,
she's done this
right?
with me before. Yes, pension as well.
So this is the Social Security box.
Got it.
So what am I doing now? I'm just explaining you the structure of the cash flow, right? So in the first part here, you see from top to bottom, first we have the income part. Sources of income, flows that come into your cash flow.
Exactly.
Here, this is the box. I'm using it as salary. So in this case, you're paying to the state, you're paying Social Security, and you're paying taxes. As long as you're an employee, and then when you are self-employed, is Sarah self-employed or an employee?
Sarah is an employee, normal 9 to 5.
Perfect, so this is a perfect cash flow for her. Social Security and taxes automatically deducted from her pay slip, and at the same time, her employer is also paying into this, right? So these two boxes are dedicated to the income and what's happening there. The box here is dedicated to the expenses.
Gotcha, so expenses are money that is being spent for rent, lifestyle, your travel obsession, things like that.
So what does Sarah usually spend money on? What does this look like?
Sarah's probably breaking even right now because she's never really thought too much about a budget, and she really values having a wonderful experience here in Germany.
So basically we have the scenario where we don't have any cash flow, we don't have any surplus available.
Yeah, and hopefully we can change that based on what we're doing here and the fact that once you realize you don't have cash flow, like your second life begins. I don't know about you because you're quite good with your money, but I was in debt.
This is not the first and only relevant part of financial planning. It's one of the biggest myths of financial planning. Yes, of course, there might be trouble implementing something if there's not enough surplus. That is clear. I think that concept is understandable. However, financial planning is also about building financial habits and understanding how your money works, which is not taught anywhere.
No, except for on my financial fluency masterclass.
So if you know Vanessa, then you're in luck. If you work with an advisor, then you're making the right choices, but not everyone comes from the background where this is possible. So within this cash flow, what you can see is, what we see as advisors very quickly is we analyze the liquidity of a person, which means liquidity, how much money is available, but also what is happening with the flow of money that you receive. Be it from, is there any way to optimize net and gross? We call this a net and gross split. So basically, is there any way that we can save you taxes for your investments? Is there any way that we can help optimize your social security if you qualify for it? Your expenses, what does that look like on a monthly basis?
Could I ask,
of
if
course.
your potential client does have a cash flow of 0, does that mean they can't work with you? You don't want to talk to them? Or what happens in this scenario?
That depends, because we don't stop here. Liquidity is also this little box that we have here.
Ooh, we got more boxes, okay.
So basically this is what happens when you start distributing your money monthly, right? And it might be that Sarah does not have money because she's currently saving 1,000 euros, for example.
Okay, there we go. Oh, Sarah is coming through with the savings. Yeah.
Could be an example. Or it could be that definitely Sarah does not have a surplus here, but she has, I don't know, 500,000 on the bank.
Okay, Sarah, why am I paying for drinks at night? No.
It could be that she has this. It could have additional liabilities. Liabilities meaning any type of thing that is basically a financial instrument that is taking you money. So it could be debt, it could be a mortgage, it could be student loans, it could be pets. In this case scenario, there might be some savings there. And there might be some savings quota as well. So not necessarily a monthly surplus is necessary or in a specific height to be able to do financial planning. It's just a matter of optimizing your finances as well. So just leaving money in the bank with the current 7.3 inflation in Germany and low interest rates in the banks, they're rising a little bit, but still not significant. Your money is not growing, it's burning. It's literally
depreciating.
Opening your wallet.
Yes.
Taking a bill.
Yep.
Burn it.
Oh God.
Yeah.
I've been triggered. And for those of us who don't know what inflation is, could you describe that a little bit?
Yes. So I'm gonna take you back to your childhood.
Okay. Young
You
Vanessa.
channel little Vanessa.
Yeah, the 90s in Los Angeles. She is living her best life with her candy necklaces. Okay.
Amazing. So imagine that this were not euros and these are dollars. Here, have $10.
Okay, so big money for a 10-year-old or for a 5-year-old.
Lots of responsibility.
Yes, exactly.
You are in charge of buying ice cream.
Okay, great. So in Los Angeles, we have these wonderful like Mexican tradition of having men and women push around these carts for popsicles and elotes, which are like corn with like cheese and cream and deliciousness. So I'm gonna go buy 4 popsicles for me and my friends with this $10 in the 90s in Los Angeles.
Fantastic. So 4 popsicles. Okay. Give back.
Oh no.
And now it's you, Vanessa, today.
Oh God.
Living in Berlin.
Yes.
Here, have $10.
Okay.
Please bring me ice cream.
So I know for a fact that I can't buy a single popsicle for what I could in the 90s. I think I could get about 2 gelatos here for about 10 euros.
Like nice scoops.
Yeah, nice scoops.
The nice ice cream.
Yes, but still 10 euros for 2 ice creams. It's tough out here.
Especially with 7.3% inflation at the moment. So
yeah.
What just happened?
I spent my money and I'm poor.
Yes. First of all, consumption, obviously.
Yes.
But what is happening there is we have the same net amount of money. We have 10 euros. Okay? But over time, the amount of things you can buy with the same amount of money has decreased. When this happens, we call it loss of purchasing power. You can purchase less.
Yeah. Well, we also just spent 40 euros on brunch. So if that's not proof of inflation, I don't know what is. Eggs now cost 40 euros with some razzle dazzle on top.
Definitely not. So you just lost your purchasing power, which means in this case that we are underestimating this massively, right? Massively. Because the amount of money that we have today and you use today, so in this case, Sarah, for example, Sarah is sustaining her life with the net income that she has, and she's spending it all in the lifestyle that she's used to having. One of the major risks and situations that Sarah needs to address yesterday is the fact that the money that she has available today, or the money that she needs today, is not going to be worth the same in the future.
Yeah, that's a tough pill to swallow.
She's gonna need a lot more money to be able to afford the same things. And that is something that our brain has trouble comprehending unless we see it in numbers and we realize how big this of an issue it is. And in order to get to the point where Sarah gets the chance to really create this foundation for herself and continue to live comfortably, this means that all the stages of financial planning are relevant.
Absolutely.
So liquidity management, having clarity on her goals. If she says, okay, I love to do yoga, I love to go hiking, I love to go for brunch and get overpriced eggs.
Yes.
Why the hell not? It is possible. But for that, you need to make sure that that is, if you get used to it, living standard, that is also sustainable in long term, regardless where you are living.
Absolutely. And I think it's also important to mention that when we talk about inflation, different countries are experiencing inflation at different rates.
Yeah.
So if you go somewhere like Argentina that has a historical high of inflation, that 10 euros might not even buy you bread. If you go to Venezuela, where it's like thousands of percent of inflation, you might need like $100,000 to get the $40 brunch that we had here in Berlin. So don't sleep on inflation, and that's why we're really diving into that here. So coming back to Sarah's example,
yes, please.
Let's say she has this initial consultation, she does the financial fluency masterclass, and now all of a sudden she has 500 extra euros every month to distribute across her goals. What would she do?
I would take a look, and Sarah, I'm going to ask her, basically going to pull her with questions on where does she see herself in short, mid, long term. What is the life that Sarah wants to lead?
Let's say Sarah just wants to be a happy middle-class person that retires on time, so at 67, and she doesn't particularly have any opinions about having a family, having a partner, having kids. She just wants to focus on herself becoming ready for retirement.
So my first instinct would be to first of all make sure that the cash flow is optimized. So to check for Sarah what options are available here on the foundation of the risk that we can get more out of her money. And if she starts investing, the second she starts investing, that this is also tax optimized. Very important.
Very, very important. Could you put 500 here so we can know
yes,
that we have
put 500 here.
A different example? Okay, so new example. Our girl Sarah has 500 euros to do a little something something with. What are a few basic options?
So first of all, I'm going to check how much is she missing on her goals and on her living standards. So she says she wants to retire at normal age.
Yes.
And to keep her current living standards.
Yes.
How far away is she from that, from what she already has today, and with other assets she might have in somewhere else? If she's an American, she might have 401k or an IRA or something back home. How do we construct this to know how much her gap is? So how much is she missing from what she currently has access to or will have access to versus what she will need to sustain her living standard?
I also think it's important that this changes with age. So if Sarah was 50, then we have a lot to overcome in a short amount of time. If Sarah is 22, she has time and compound interest on her side.
This is the challenging part when we're advising people. Your age, your situation, your geographical flexibility needs will heavily change the way we prioritize your assets. The first step would always be liquidity and risk management. Let's assume that this is checked. and that Sarah is already at the point where the basics are covered. She had the privilege that all of these is possible. And then the next topic, which is a threshold between risk and wealth management, would be her pension. And in this case, it's not talking about just pension insurances, but it's really a wealth building strategy. So how do we allocate the 500 euros after everything towards midterm assets? Is it going to be property? Is it going to be private equity? Is it going to be, well, as an American, no market assets? What type of pension insurances can we have that are going to also be giving her a kickback on taxes and so on? How do we play this so that Sarah reaches retirement age with the most flexibility? And does Sarah want to stay in Germany? What does that look like?
Sarah wants to die here, yes.
Okay, then we need to make sure that her assets in the long term are also tax optimized during retirement. Because surprise, you also pay taxes during retirement. And
No me digas. Yeah, it is hard being an American here in Germany and just seeing where all the little hands are in every pocket.
Aussie.
Yeah.
That's really not great. So how do we create this balance? So in a nutshell, what you have just seen in this video is the job of a financial advisor. Because this concept, obviously you can read upon, the information is always available. But it is really this personal touch of getting to know Sarah, getting to understand what is she aiming for and how to take her from A to B in the most optimized way, and accompanying her step by step. So next year, in 10 years, and 5 years before retirement, during retirement. How do we make sure that this is still current and suitable for what she wants to aim, and how do we change the course accordingly? So this is what financial planning reduces to, and it requires a lot of trust and a lot of honesty from both sides. So it's great that there's at least this position of people reaching out and saying, even if I am here, and the first example where I don't have anything here, already having the willingness to say, I want to change, I want to learn how to deal with my money, and I'm going to start to proactively take the necessary choices so that I can change and create the life that I imagine. That is the mindset that's going to take you furthest in the future.
And this gets complicated, so that's why you have professionals like Martina that can build something that fits your lifestyle and expectations. This is actually the end of our very first video in this series, which is very exciting. I feel like we left with more questions, which is totally natural, totally fine. Definitely hit that subscribe button on YouTube and hit the bell for notifications about when new videos come out every single week. We'll have a long series about both financial wellness and wealth building, and I have a tax series with my expat taxes, so check out the playlist. I'll link it to the left. Most importantly, thank you so much for being here with us in this first video, and I will see you on the internet. Martina, if people want to work with you, where can they find out more information?
So we're a team that is ever growing. So first of all, you can find more information at expats.com. And also follow us on Instagram if you feel like having the daily news and what we're up to and the information that we provide. We provide many of cost-free educational resources such as workshops, talks for companies as well if you feel like your colleagues should know about this. But if you have any personal questions, you can always reach out directly through Vanessa, through our handle, for our personal accounts. We are an ever-growing team of over 14 advisors Germany-wide at the moment, but over 1,500 our company. So don't be shy, let us know.
Absolutely, and those details are going to be linked in the description, so check out more information there.
Thanks for watching. If you liked that video, please give it a thumbs up and subscribe to my channel.